Alright, YouTube video is going. What's up, YouTube? So, basically all we're doing right now, guys, is a top-down analysis. So what does that mean? It means start from high time frames, move down, see where we're at. Right, so I like to start from the 4-hour when we do this, or even the daily. And just identify market structure, right? So we have been in an uptrend. Right, so we're at a little bit of a high right now. We just had this all-time high. So just keep these things in mind. Market structure, trends, all that good stuff. So this is a low, so we're gonna mark this low out. Very important low. It's the lowest price has been in a while. One second, I'm just quitting some of my apps. Alright, so the next thing we're going to look at is the 1 hour. We have this little range marked out, so now we're going to find some highs and lows on the sessions. Y'all know the drill. This is black. Also going to put this low. Bam. Put this low. And I'm actually also going to pay attention to this low as well. We have this all-time high marked out already, 5368. This is an all-time high. So what we're going to do is we're going to take a text. And we're going to say all-time high, ATH, all-time high, because that's important. All-time highs are always very important. Just so we don't think this is some random level. And then the next thing we're going to go with is we're going to put 50 minutes. And now we're going to find the open, right? So New York open. So we can do that right here. Bam. And I usually have it in black if price is below it, and blue if price is above it, just showing the reaction we had off of it. But sometimes, like if we're right around it right here, I'll just do a little bit of both. So I'll just make the outline black and this blue until we get a clear direction. If we close below it, then it'll be black. It'll be a supply zone. If we close above it, blue, demand zone. All right, so that's mainly what I'm looking at today in terms of zones. And now in terms of price movement, I want to see some volume come in. I would like to see a continued uptrend and us come up and target all-time high. And I would take some longs on a pullback or break and retest setup. So ideally, my ideal scenario for today looks something like this. All right, so come up. I would love to take some longs right here on this break and retest. Target this. And I would love to see a clear uptrend, then we target all-time high and I get longs. That would make my day. If that happened, I would love that. Now notice, I said ideal scenario, right? So that's what I would want to happen. Not necessarily what's going to happen, but that would be like an A+ setup for me today. And the more and more I trade, and I still learn things. Like every single day I trade, I learn something, or even when I don't trade. Waiting for A+ setups will make your life so much easier. So much easier. Like define what you want in a trade before you're in the trade. And another thing is you want to know your risk before you're in the trade. And this is so big, and I know so many people don't do this because I see it in the chats. So if you ever see somebody doing this, please help them, because it's like just really important. And I also think that a lot of traders who are already making money and who are already doing well understand this, but a lot of newer traders don't. You want to define your risk before you're in the trade, not while you're in the trade, because while you're in the trade, you're going to be emotional. You're going to be thinking about all these different things. So while you're in the trade, say to yourself this, or even like if you're following an alert, 20 seconds after you're in the trade, say, what amount of money am I comfortable losing before I get out of this trade? So say you're comfortable losing your whole contract, right? So that means the option either hits or your contract expires worthless. And so that's fine for some people. But some people cannot handle a 5 to 10% drawdown. They start freaking out. And I'm not being mean, it's the truth. Like some people have seen it in the chats. They'll be down 5 to 10%. Everybody's like, oh no, I got to get out of this position. And if that's okay, but you have to define that beforehand. You have to say, okay, if this option is down 5%, I'm getting out. Before, right? So this first thing you do when you're in the trade is, where am I getting out on the downside? Where am I getting up? Where am I getting out on the upside? Because doing that will allow you two things. One, you'll manage your risk. You'll make much smarter decisions. And two, you'll be able to trade with a clear mind because you won't be fearful. Because if every time here's an analogy. If every time you went swimming, some people are afraid of sharks. If every time you went swimming, you knew exactly where the sharks were, like if there was a shark like 2 miles away, you probably wouldn't care. But like the reason you're scared is because you don't know. So our fear comes from unknown. In most cases, it comes from the unknown. The reason we're scared of the dark as humans is because we can't see the dark, therefore we don't know what's in it. So our brain makes up all these fucking things of like, oh, there's ghosts and there's goblins and whatever the fuck. But the real thing you need to do is you need to be aware of the outcomes that can present themselves before you're in the trade. Because then, when you're in the trade, you'll be thinking logically. Right? And it sounds like elementary if you're a really, really good trader already, but I'm telling you, it's so important. A+ setup is good risk to reward. Very good risk to reward. So we said, what time do signals get sent? So signals get sent when the market is open for options, and NQ, David will send signals usually when the market's open as well. Sometimes, I mean, obviously, like when the futures market's open, because the futures market's 24/7, but usually between 9:30 a.m. and 4 p.m. I would say usually like before 4 p.m. But yeah, when the U.S. stock market's open, the option signals are sent, and sometimes there's 5 signals a day, sometimes there's 2, sometimes there's 1, sometimes there's no signals. So it just depends on what our analysts see in the market. I trust our analysts, right? So I'm never in there like really asking like, oh, when are we going to get a signal? But the way it works is pretty much we'll have a few stocks, or he'll have a few stocks. Money Motive will have a few stocks that he's watching on the watch list. So he'll be looking at, say SPY or say Target stock, right? He'll be looking at Target stock and he'll be looking for a certain setup to play out. So he's like, okay, I have my eye on this. If the setup plays out, he'll send a signal. If it doesn't play out, he won't send the signal. So let's see what we do in regards to New York Open right here. If this uptrend continues, I'd be looking for price to come test this level. I mean, that'd be a nice 10-point move. Nice scalp. I'm trying to find my cube real quick. Charging cube just so I can charge my computer. Cool. Computer is charged. Alright, so we are getting a little bit of buying pressure here. Let's see how this plays out. Why did I choose that candlestick for a zone? That is the New York Open. Rejections of first touch theory. I mean, mainly with first touch if I'm just scalping. So if I'm taking a setup, say a break and retest setup right here, right? Good question. So say I'm looking like something like this, right? So this is literally all I'd be looking for to play out. And I just have a high risk reward and it either works or it doesn't. So I'm just looking for this, right? So say this comes through here, comes back down. I'm trying to buy right here. My stops are below the zone. Then I'm targeting here. Bam, like that. Right, so the most complex aspect of this strategy, I would say, is understanding the zones, where to put the zones, which is also pretty simple, but it can be kind of intimidating if you're new. Understanding market structure, trends, uptrends, downtrends, and then managing your risk. But I would say the entry criteria is usually pretty simple. And one thing I want to go over real quick is the difference between entry criteria between scalping and between day trading and between swing trading. So when I'm day trading or swing trading, I'm targeting a set level. So let's say I'm I don't know, let's say I'm in a 4-hour trade. I'm targeting a set level. So I'm targeting this, right? Just say this. But if I'm scalping, I'm targeting a set risk to reward. Does that make sense? So if I'm scalping, I'm going purely based off of my risk to reward, meaning I have one of these open, or I have a mental one of these. It gets to a point where I can just kind of calculate this in my head, but I'm usually have one of these open. And then I'm targeting a set risk to reward. So let's say I'm targeting 10 points, or maybe I'm just targeting 13 points because I wanted 1 to 5 or whatever, right? Or 1 to 3. So that's the difference in entry criteria, is when I'm day trading and when I'm swing trading, I am targeting a level. So I'm saying, okay, I want us to tap this level, and I'm looking at the risk to reward, obviously, but I'm just more targeting a level. But with scalping, I'm targeting a set risk to reward ratio, because scalping is just a numbers game. You just want high risk reward, high risk reward, high risk reward. Cool. Yeah, Crow, we do have the consumer confidence at 10 a.m. So it'll be interesting to see how price reacts to that. Very interesting times, because some of these news events we will react so much to. Like, we'll have some fucking crazy reaction, and some of these news events we just won't really react. SPY to 0. I don't know. I mean, a lot of volatility on this stuff. I'll tell you that much. We have an election year. I don't care about politics at all. But what I do care about is money, and what I like is when the elections come, lots of crazy stuff happens in the markets because there's all this weird stuff going on, and it makes stuff move up, makes stuff move down, and it's interesting. I mean, there will be a very volatile year in pretty much every asset class for the next 12 to 18 months. And there's just going to be crazy stuff. There's just going to be weird news headlines, like there always is. Like, you remember 2020. I mean, geez. Even like now, like I don't even really watch the news, right? But sometimes I'll be with a friend or someone that will have it on, and I'll come down and look at the news, and it'll be like UFO. And I'm like, damn, that's where we're at now? Like, we're doing the UFO thing? And like, I'm not here to go on a conspiracy theory tangent. I'm just saying that when you look on the news and you start seeing UFOs, whether they're real or not, it's probably a sign that shit's going to get pretty crazy in the markets, because that means that the public perception and all the narratives are just getting weirder and weirder, right? Like, at first we had like the global war stuff, and we still have that, but now UFOs are in the mix, and we had the fucking like satellite. Like, it's just going to be weird stuff. Weird stuff. I did see the videos of Trump speaking of crypto. Yeah, that's going to influence the market heavily. I'm telling you, it's like, this stuff really matters. Watch what all these people say when they talk about policy, when they talk about crypto. I don't really listen to anything else these politicians say except when they talk about the markets. Still pretty chop. Ken, I definitely recommend watching the premium courses, but these are areas of liquidity, right? So it's not fair value gap stuff. I don't use fair value gaps. Some of the other analysts do. Personally, I just don't. Nothing against them. I just don't. These are just open. So there's everything I have marked out is either a high, a low, an open, or just an area where there was a lot of volume, right? So a lot of buyers, a lot of sellers, kind of thing. Sometimes people ask why I only trade ES, and the reason is very simple. I have been looking at ES for the past 3 years, like just ES. And I do trade NQ sometimes. I don't have as good of, I don't have as much success on NQ. So I'm just like, okay, I'm going to stick with what works for me. I'm not going to change things up. Yeah, the Federal Reserve stuff is crazy. Like, I mean, I saw a video the other day of like one of our like top, somebody's probably seen this, one of our like top Federal Reserve employees, or it was an employee of either a top Federal Reserve or the financial branch of some government institution, saying that like they don't know how the economy works. They're like, oh, I think it works like that. I think it does that. And I don't know like what's going on with that, but that's not what you want to see. Y'all saw that? Yeah. Like, come on. They look like they were taking like a math test. Like, remember when you were like, you were doing your homework for the math and the teacher's like, yeah, what does that mean? And you're like, I don't really know. You're just trying to like fudge it. That's what the guy sounded like. You're like, yeah, it's, yeah. That's what the fucking person sounded like, except they're managing a country's financials, which is interesting to say the least. So there's no clear direction right now, right here on this open. It's just very, very choppy. We could definitely move down though. I mean, it's really just about identifying a trend, and this is like a little bit of an uptrend right here, but we could reverse, right? Because we have this high, come down, lower low, lower high, come down. So I would be looking for shorts below this level. Ideally, actually, I'm going to mark out this open too, just so people can see this really clearly. I'm going to mark out this low. So this is where I'd be looking for shorts, is below both of these levels. Break and retest or something like that. And we could probably come down and target. I'm trying to find a nice level for us to target because there's a pretty big gap. 5294. I like this low for us to target. And the one below it. I'll show you why in a second. This is a very strong low. So it was a low of two sessions. So it was a low of Asia session and London session. Red Bull. Somebody told me Red Bull's not good for me. And I just hope it's not that bad because I have a lot of Red Bull sometimes. I do have the sugar-free one though. Alright, let's see what happens here. I get so fucking annoyed sometimes when there's no volume. Like, that's always been a thing for me. It's like when there's no volume, I get so annoyed because I just want to see volume, see a nice setup that's playing out. When there's no volume, there's just nothing going on. It's just very like annoying. But I mean, it's like I do it to remind myself. It's like how is me getting mad gonna help? You know, it's like how is me getting annoyed gonna help anything? It's not. I don't control the market. I control the buttons I press. So as long as I'm smart with pressing my buttons, I make money. So I shouldn't really worry about how the market's doing or what the market's doing. You know, I just focus on what's in my control. Sugar-free Red Bull is even worse. Damn, y'all, my bad. That's probably not great for me. No volume's like watching paint dry. It is, but it's like, it's a very good exercise because it definitely helps you practice emotional control and discipline. Because you got to know when not to trade. It's equally as important as when to trade. Check the volume. Yeah, it's pretty damn low. We did just have a holiday. We do have the news at 10 a.m. Cooked with the Red Bull. What tool do I use to make the time zone? So I'll say this right now, and it's all in premium courses, but I use Asian Session Range, and the courses will just help you a ton because it's for beginners, it's for anybody, right? So any information that is regarding my chart or how I trade will be found in the courses, and they're very helpful. Everybody who's watched them loves them and just finds them very helpful. But yes, Asian Session Range is the tool I use. Really, really good indicator. So maybe we get a little bit more volume here. No volume days can be very hard for people because what they try to do is they try to force trades. So it's so ironic because sometimes people take the biggest losses on no volume days. And you're like, okay, why does that happen? If there's no big moves, why are people taking big losses? It's because people chase all these moves. So it's like death of 1,000 cuts. So they'll take a loss and they'll try to get in another trade because they want to make up for the loss. And they'll take another loss and they'll try to take another trade to make up for the now even more money they've lost. And they just repeat this process over and over again until they lose a fuck ton of money. And you look and there's like no volume on the day. And you're like, dude, if you would have just not traded, you would have been all good. But we have this urge where we want to win back money that we've lost and where we want to just place trades because it's exciting. Right, so don't fall victim to that urge. If the only reason for why you're in a trade is because you need to make back money you lost on a previous trade, it's not a good trade. And I've seen people say that before. I've seen people say, oh, I need to enter this position or this position to make back the money I lost. I'm like, no, that is not how it works. You need to enter because a certain set of criteria or a certain set of rules or conditions presented themselves giving you an A+ setup. And you know the probabilities of the setup, so you know what happens if you're wrong, you know what happens if you're right. That's why you need to enter. You don't need to enter because you just lost $100 on a call option on Disney stock or whatever, right? So just only trade when you see opportunity. Just don't chase trades. There's always going to be another trade. Always, always, always. And you don't think there is. Like, you tell yourself, you're like, oh, like this trade will never happen again. Like, that exact move in the market won't happen, but there'll be something so similar. All these charts are just buyers and sellers, and they repeat the pretty much same patterns. Every year, every few months, it's something very, very similar happens. Right? Just time and price. And human psychology. And human psychology will usually repeat itself. So no real volume here. If we continue low volume, I just want to see us sell off. I just want us to see us get below 5,317. Just keep moving down. And I would get into some shorts. I just want to see clear direction. I don't like this no volume thing. Yeah, I mean, you just don't really want to force trades when you see shit like this. Exactly. What trade could you have taken in the last 3 hours? None of this. Maybe you could have taken this morning. You could have taken that. Right, so a little short off the top of this. target this low. So you just be going from this high, targeting this low. Besides that, I'm like, Alright, so wait for setups. And then when you see the setup, take the trade. Somebody asked me the other day, somebody was like, when should I buy a funded account, or when should I start trading with real money? And a lot of you are not going to want to hear this at all, but I don't think you should buy a funded account or start trading with real money until you have at least a few months of proven profitability. So what does that mean? That means that you have been trading on a demo account or on an account that just doesn't have that much money, and you can look at your account and say, okay, for the past 3 months I have made money. I have been green on March, I've been green on April, and in May I was also green. So you look and you say, okay, 3 months of profitability, now I can switch over to an account with real money, or I can switch over to a funded account. So I would not be trading with real money until you have proven profitability, because then you have confidence, and now you also have a good strategy. You need to make sure that you're executing on your strategy, because your strategies can be good, but if you're not executing, it doesn't matter. So you need to prove to yourself that you can actually make money. So that's my answer for how long I would wait to trade on an account. So getting a little bit of volume coming here now. But we could just have more sellers come right back in around here, push us back down. So just kind of a waiting game right now. We also have news on Friday. So Friday is going to be a very, very fun day in terms of market moves. And we have a short week, so remember, sometimes with these short weeks, we don't have much volume the whole week until we have the news. Alright, so I'm going to cut the YouTube video here, so peace out, YouTube.